It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
So Intel Corporation, it's trading at a price of about $48 per share right now, $196 billion market cap, and it does provide a nice yield of 3%. What does Intel do? Intel is a designer and manufacturer of microprocessors for computer system manufacturers. They also produce motherboard chipsets, network interface controllers, and integrated circuits, flash memory, graphics chips, embedded processors, and other devices related to communications and computing. One would think that it would have been a strong performer over the last year given the chip shortages that we've experienced and the fact that some semiconductor and chip companies have had very strong returns over this period. For example, Intel's competitor Advanced Microsystems, AMD, is up almost 30% over the last year, and this is after a very sizable pullback since November. But unfortunately, Intel stock has done less than nothing for investors over the past year, down 24% in the past 12 months. A few things to note are that Intel has taken a lot of heat, essentially for more than a decade, for losing out on some key shifts in the technology market. We'll take a look at the recent financial results. The company does look cheap, trading at about 6 times cash flow, but it's not been a growth stock. Revenue was up about 3% in the last quarter, and revenue growth has averaged about 4% annually over the past 3 years. Earnings per share, non-GAAP earnings per share in the last quarter were down 21% and basically flat or down about 2% for the full year of 2021. Based on the company's guidance, it looks like they are expecting another sizable drop in earnings per share non-GAAP for the first quarter of 2022, with guidance at 80 cents per share compared to actual performance of $1.39 per share in the same quarter of the previous year. I would classify Intel as a value stock, but it's not a value stock that I would personally rush out to buy. The financial performance has been lackluster, and it appears that the expectation is for negative earnings growth in 2022, while competitors like AMD are expected to continue to grow earnings at a double-digit rate. There is the recently announced $5 billion acquisition of Tower Semiconductor. Intel says that they expect this acquisition to be immediately accretive. This could help, but I don't know if it solves the company's underlying problems, one of which is complete lack of confidence from investors. I would personally take a wait-and-see approach on Intel. There's no reason that I can see that would persuade me to rush into the stock right now, especially given the negative momentum in the stock price and the negative earnings growth expected to start off the year.